Warren Buffett avoids investing in Russia after facing threats of violence and asset seizure. Hit the subscribe button and click the notification bell to be part of the conversation. Fears of rising inflation and slowing growth, partly driven by the COVID-19 pandemic, were weighing on some investors' minds before a war in Europe drove a spike in commodity prices. Buffett recalled during Berkshire's annual shareholder meeting in 2006 that when he invested in Salomon Brothers in 1987, the bank owned an oil company with major interests in Siberia that soon ran into problems.
As you know, in 1998, Walter Wriston said sovereign governments don't default. In 1998, in Russia at least, he was proven wrong. And Charlie and I inherited a business at Salomon that was in the oil business, big time out in Siberia. And there came a time when we got to dig the holes. We sent the money in, and as long as we were drilling, we were welcome. And then we wanted to start taking the oil out. After our money had been used to drill the holes, they weren't quite as friendly. In fact, it was really kind of extreme what took place with us. So having had a few experiences like that, it might take us quite a while before we wanted to sink a lot of money into Russia. It may be different now, but I don't think it's any certainty. I had breakfast in Sun Valley 3 years ago, this July, I believe it was, with Kordakovsky, and we had a translator there, and he talked to me about whether he was thinking about listing Yukos on the New York Stock Exchange, but he said, it would require registering with the SEC or something, and he wasn't sure whether that would be too dangerous. Well, I don't think he listed there, but he went back to Russia, and he's been in jail now for, just about ever since. And Yukos was put into bankruptcy with tax claims, and I just think it's a little hard to develop a lot of confidence that the world has changed permanently there in terms of its attitude toward capital, and particularly toward outside capital. Charlie, what are your thoughts?
Yeah, the situation reminds me a little of polypetroleum, which years ago was much traded in Los Angeles. And the saying always was, if they ever do find any oil, that old man will steal it. And I'm afraid we have some of that problem in many of the countries in which we're seeking for oil.
Didn't we really have the livelihood of our guys threatened over there, Charlie? I think we sent in some people to get out the equipment, and they said if they sent in the people to get out the equipment, not only would the equipment not get out, but the people wouldn't get out. So we understood the situation.
We have to believe that the unprovoked invasion of Ukraine by Russia has changed things, and it is difficult to see today how to go back. Against the backdrop of unpredictable and dangerous geopolitical upheaval, here is some wartime investing advice from Berkshire Hathaway's Warren Buffett from an interview in 2014, the last time Russia invaded Ukraine.
If you've got a wonderful business of your own, in Peoria, Illinois, why in the world would you sell it today because of what's happening to Ukraine? If you've got a farm that's producing for you, if you've got an apartment house that's fully occupied, why in the world would you sell it today because of what's happening in Ukraine? The same applies if you have a piece of a wonderful business or a piece of many wonderful businesses. They react too much to short-term things in the stock market, whereas they behave quite rationally when they get into other investments.
After Russia annexed the Crimea Peninsula in March 2014, Buffett called on investors to continue investing in stocks in an interview with American media, saying that there is value in American companies. The worst thing is to hoard cash in times of war.
Would you have done that anyway, whether or not the futures were down? Would you still be buying?
Well, I had a price limit on it, and we were buying it on Friday, but it's cheaper this morning, and that's good news.
So you buy more as a result.
Absolutely.
when people start to think, well, this could be the beginning of something really bad, it could be even a World War III situation, it could be a return to the Cold War. Does any of that ever go through your mind?
Well, if you tell me all of that's going to happen, I will still be buying the stock. You're going to invest your money in something over time. The one thing you could be quite sure of is if we went into some very major war, the value of money would go down. I mean, that's happened in virtually every war that I'm aware of. So the last thing you'd want to do is hold money during a war. And you might want to own a farm, you might want to own an apartment house, you might want to own securities. But I mean, during World War II, the stock market advanced, and the stock market's going to advance over time. American businesses are going to be worth more money. Now, dollars are going to be worth less, so that money won't buy you quite as much. But you're going to be a lot better off owning productive assets over the next 50 years than you will be owning pieces of paper, or I'm going to throw in bitcoins.
Although ordinary investors will not be as open-minded as Buffett, who has 80 years of investment experience, keeping in mind the detailed dynamics of the stock market during this crisis will provide a reference for future investments. On the other hand, Warren Buffett's business partner, Charlie Munger, raised concerns about Russia's invasion of Ukraine, comparing it to Nazi Germany's rampage across Europe in World War II. Before this conflict, companies had always taken refuge behind the sacrosanct principle of neutrality in order not to speak out in the conduct of world affairs, often to the chagrin of some of their client base. For U.S. companies, the Russian and Ukrainian operations are small. Businesses in both countries account for just 1% of total S&P 500 sales. In the late 1990s and early 2000s, U.S. banks rushed into Russia, seeing an opportunity in a large, underdeveloped economy. Now, these banks are starting to flee, with Goldman Sachs and J.P. Morgan Chase already announcing their departures. Others may soon follow. It will likely be a while before U.S. banks sever all their ties with Russia. Those activities mentioned by J.P. Morgan take some time, months, if not years, to carry out, experts say. So Warren Buffett, the Berkshire chief, looks for the same key things in businesses, wherever they're based, as he said. The basic principles of trying to value the business, trying to find managements in which we have confidence in both their ability and integrity, and then finding an attractive purchase price. Those principles apply wherever in the world we would be investing. So, what are your thoughts on the best way to navigate the stock and financial markets during these times of turmoil? Let us know in the comments section down below. Thanks for watching. Peace.